Thank you very much for joining. As Jane quite rightly said, this is a level 3 module. Accruals and prepayments can sometimes be a bit of a challenge for learners, so I hope you will take something away from this session. Hopefully, at the end of this short session, we'll have a look at how we accurately account for accruals and prepayments. So we'll dip into the world of double entry, and we'll also have a look at how we calculate some accruals and prepayment year-end adjustments. But because it's quite a challenging topic, I would like to take the time today at the end of the session just to develop a simple 3-step approach, which will hopefully give you some sort of structure and help you deal with adjustments going forward. Before we start to look at double entry and before we start to look at calculations, let's take a moment to have a look at why these adjustments are so important and indeed necessary. The purpose of these adjustments is to ensure that the amounts recognised in the financial statements relate to that reporting period in hand. And the issue that you may encounter is that your business will have a different year end. It could be the 31st of December, the 31st of March, or any other date for that matter. And that's not necessarily going to be aligned to those of your suppliers, perhaps your utility supplier or your landlord for that matter. And therefore there may be a difference between what they've invoiced you and actually the services you've benefited from during that period. And therefore the requirement is to ensure that the financial statements recognise the amounts that we have benefited from and we have incurred during that period. Why is that so important? Well, for those of you that have studied level 1 and level 2, you'd be very comfortable with the fact that when you pay for an expense, the double entry is to debit the expense account and to credit the bank. And that's absolutely right. And therefore, the movements in the ledger accounts are driven by those monetary movements. But as you progress through your studies, you'll have to have an appreciation for various accounting standards, various concepts. And one of those concepts is the accruals concept. And that states that the amounts recognised in the financial statements may be very different to those that have been actually paid. And therefore, it's the role of the bookkeeper or the assistant accountant to intervene and ensure that the ledger accounts, the financial statements of this business, reflect the figures, reflect the expenses, the income that should have been incurred in that business during that financial year. Let's take a moment to break those two adjustments down. So what's an accrual? An accrual is the name given to the accounting adjustment when costs remain outstanding, they're missing, they're unpaid at the end of the period. And therefore, in this situation, we have ledger accounts that haven't got enough expenses in them, if we're talking purely at this moment about expenses. The impact of an accrual is to increase that ledger account, increase the impact on the statement of profit and loss, because costs are missing, they haven't yet been paid, and therefore our job is to account for that expense. By increasing the expense, by processing an accrual, we will increase expenses, which will naturally reduce profit. Or if we're talking about sundry income, we'll still increase that sundry income by processing an accrual, and profit will also increase. Now, the way you approach accruals can be very different business to business, and some of you may have experience of this firsthand yourself. For some businesses, historical data is sufficient. So what was the expense incurred in last quarter or last month? Some businesses will even look at historical data further back than that, maybe what happened this time last year. And that may be sufficient. However, if we just stop and reflect on that comment for a second, if we're a business that we're a very high consumer of the fuels, the gas and electricity, using historical data from over 12 months ago, given the current climate, is probably not going to be that reflective and that accurate. And therefore, some businesses will have developed a role of perhaps a forecasting model that will look at projected forecast and budgeting levels, and maybe liaising even with the utility companies to get day and night rates. So the science behind the accrual is a little bit more involved, enabling that accrual to be as accurate as possible. Remember, we accrue because something is missing at the end of the period we haven't yet paid. The flip of that, so the other adjustment, well, it's known as the prepayment, and this is the adjustment that takes place when costs or sundry income is paid or received in advance of when it's due. And the result of this is that we have a balance in our financial statements that doesn't actually relate to this period, and therefore it should be removed. So I would like to ask a couple of questions, if I may. And the first one is just to see what sort of level we're at. Do you believe the double entry would be for an accrued expense? And what do you believe the double entry would be for a prepaid expense? And if it makes it easier to provide some form of context, let's assume the expense in hand is rent. Please don't worry if you're unsure, this is what this session is about, but I will give you a moment just to collect your thoughts and send those across. Yeah. Okay. Okay, so fabulous. So Karina Baxter, I think spot on. You've gone for let's debit the expense account and credit the accrual account. Absolutely right. Well done.
Yeah.
Okay.
So yeah, so we are getting those through here. So we've got Paula G saying prepaid expense CR rent DR. Paula Mel saying CR accrued and DR rent. And Saya Christina saying credit accruals DR expense. I think, yeah. Janet Crossley here with the DR rent credit accrued expense. Oh, no, she's corrected that. She said CR rent and DR prepaid expense.
Fabulous. It sounds like we clearly know some of our double entry guys. So thank you ever so much for participating and really well done. And absolutely, when we accrue an expense, we're accruing it because costs are missing. Therefore, we debit the expense account to increase expenses, and we'll credit an account called accruals, which is recognised on the statement of financial position. And that's recognised as a current liability. And if we pause for a moment there to reflect on that, a current liability reflects something that we owe. And the reason we've had to accrue is because at the end of our financial period, costs were outstanding, they were missing, we owed them. So that fits nice and comfortably into that definition. And again, a lot of you saying some excellent responses in terms of prepayments. So well done and thank you. The double entry there is to debit prepayments, which is recognised on the statement of financial position as a current asset, because we've paid something in advance of when it fell due. and we're crediting our expense account this time. We're removing those costs because they're not relevant to this year end. Clearly, we've got some listeners today that are very, very clued up on double entry. If you weren't and you're not quite sure what the double entry is, this is exactly what the session is there for. I will just give you a moment just to pause and take a quick picture if you wanted to on your phone. We are going to be using this double entry as the presentation continues, so you may find it something just to refer back to. So I will just give you just a moment just to take a picture if you so wish.
Also, please remember that these slides are available for download in the chat, so you can download them to follow along.
Perfect. Okay. So let's have a look at a quick question. A business has paid a balance of $3,200 on its telephone expense account for the year ending the 30th of June 22. On the 15th of July, it receives a telephone bill for the 3 months ending the 31st of July, and that's for an amount of £540. And sometimes when we get these questions, they can appear a little bit overwhelming. We're given a lot of information about dates and we're given some numbers, and it's kind of a case of what do we do with what. Structure gives us confidence to deal with these type of questions, and therefore I just want to break down and pull out some key features for you before I let you have a go at a couple of questions for me. Establishing the year-end period is key, and this question is clearly given to you as the 30th of June 22. Anything before or after that period in time is not relevant to this 12-month accounting period. And what's the bank figure? Well, that will reflect the physical amount of cash that's left this business in terms of telephone expenses. And again, clearly given of 3,200, and that won't change. And then the only other figure we've been given is a figure of £540. And we're told that that relates to a telephone bill, which was received after our year end, and it's for the period of the 3 months ending July. So over to you guys now. Is this an accrual or is it a prepayment? And once you're confident which one it is, how much do you think I'd be accruing or prepaying? And I'll leave you to collect your thoughts and send those across.
Okay, so we have something in from Lisa. She said prepayment as you've covered the cost for 3 months, but only used 2 months.
Okay, fabulous.
Let's wait to see if we get anything else in. Okay, getting a couple more in now. Jenny has said accrual 360, and Anna has said a prepayment but accrual from 15th of July.
Okay. So there's a bit of controversy there in terms of the responses. So let's break this question down and let's have a look at sort of those component questions. The end of my financial year is the 30th of June. So any financial period that relates after that year end is not relevant to this ledger reporting period and therefore should not be included. At the end of June 22, there's a balance on my telephone expenses account of 3,200. On the 15th of July, which is after the year end, so that 15th of July is after the year end, we receive a telephone bill for the 3 months ending July 22, and that's for £540. And that 3-month window will be for the months of May, June and July. And therefore, it should be an accrual, but only for £360, which I believe we did get. The double entry is reflecting of the fact that at the end of June 22, the months of May and June were outstanding. I hadn't yet paid them. And I know I hadn't paid them because the invoice wasn't received till July 22, so after the year end. And therefore, there was a need to account for those missing costs. The double entry that you can see on the screen is exactly the same as what we saw previously. We're debiting the expense account and we're crediting that accrual account. But quite rightly, as somebody pointed out, not for £540, for £360. And often that can be a challenge for learners, understanding how much and how many periods they should be adjusting for. And therefore, I just want to take a moment to share with you a quick tool which I hope will be of assistance going forward. If we map out our reporting period, we were told that June 22 was our year-end cut-off. So that must mean our year-end spans from the 1st of July 21 to the 30th of June 22. Anything before or after that period is not relevant now. If we then compare that to our invoice period, and I've greyed out some of the months because they're irrelevant to this illustration, but if we compare our reporting period to our invoice period, we can then see that the months of May, June and July were covered by that invoice. Let's remind ourselves that our year end is June, and therefore anything that falls outside of this 12-month window is outside of the scope of this reporting period and therefore should not be included. And therefore that invoice that was received after the year end for £540 should only be accounted for £360. So the £540, dividing it by the 3 months and timesing it just by the 2 months, the months of May and June. Let's have a look now at how that would translate into some ledger accounts. So 2 accounts, a telephone expenses account on my statement of profit and loss, and an accrual account on my statement of financial position. The bank figure is unchanged. That represents the physical monetary movement during this period, and I would have credited the bank and I would have debited my telephone expenses account, as you can see. We've agreed that we need to accrue these costs, and the reason we're accruing is because they're missing, and therefore we need to debit my telephone expenses account with £360 and credit my accrual account with £360. The debit, it will increase the telephone expenses, meaning that when I transfer through to the statement of profit and loss at the end of the year, I'll transfer through a figure of £3,560. And we can see that's very subtly different from the 3,200 that I would have transferred had I not have intervened as the bookkeeper of this business and accrued those missing costs. On my statement of financial position, I will have an accrual balance of £360, which will be recognised as a current liability, and at the end of the year have a balance carried down, ready to be brought down at the start of next year. Let's turn our attention now to what happens at the start of next year, so the 1st of July 22. Well, as you can see at the moment, my telephone expenses account is £0, and I have a balance brought down of £360 on my accrual account. And that represents the accrual that was made at the end of last year. That represents the liability this business had at the end of last year for the months of May and June. Now, clearly that can't remain on my statement of financial position. It won't be a liability because the appropriate payments will be made. And therefore a reversal transaction takes place, which will remove the current liability and pop it back into the telephone expenses account as a reversal. And we'll achieve that by debiting my accrual account and crediting my rent account. And that's sometimes a little bit complex. So I'm just going to show you that again, if I may. At the start of July, we have a balance brought down of £360, and that represents the liability that was there at the end of last year, the accrual I made of £360 for those missing costs of May and June. That can't remain there, and therefore it will be reversed back in and cleared. So I'm going to clear my accrual account by debiting it, and I'm going to credit my telephone expenses account. Now, for some of you that have gone through the routes of level 1 and level 2, you may be sat there thinking, well, this is an expense account and expenses should be debits. And they absolutely should be. And therefore, my question to you is, when I pay the invoice, and remember, when I pay the invoice, it will be for the full value of £540. If at this moment in time I was to clear that telephone expense account to the statement of profit and loss, what would be the balance on that account? So how much would I be transferring at this moment in time to the statement of profit and loss? Again, please share with us your ideas.
Okay, so we've got someone in here. Jenny Cornish has said 180.
That's brilliant.
We'll just wait a little bit to see if we get anything else in. Getting a couple more in now. Karina Baxter has said 180 DR as it covers the current month. Janet Crossley has said 180, and she has also said 180 left over, not inclined. Paula Clark has also said 180. Louise has said 180. Seems to be 180 across the board.
Fabulous. Yeah, and you're absolutely right. It is indeed £180, and that represents just the month of July. So last year, I accounted for the months of May and June. This year, I've paid the invoice. The invoice was for the months of May, June, and July. But only the month of July is impacting this telephone expense account, and that is because the accrual that was required at the end of last year. So fabulous, well done. And before we move on and look at another type of question, or the style of question, are there any questions? You just give you an opportunity just to throw anything at me that you may want me to go through.
All right, so yeah, just gonna wait a couple of seconds to see. Okay, so Sweet UK asked, why rent in here?
It's just the narrative that was put on this slide. So it generally will be the name given to the account that you'll reverse it back into. So in this question, telephone expenses would be relevant. Sometimes things are just left over. So yeah, absolutely. Normally the double entry will reflect the name of the account it's reversing back into.
Okay, perfect. Yeah, we're gonna just another minute, and then if we don't have anything else, we can go ahead and proceed. Nope, doesn't appear to be anything else. I'd say, yeah, you're probably good to proceed from there.
Fabulous. Okay, so let's look at another question now. Similar. The business pays its rent quarterly in advance and has a year end of March 22. The last payment was on the 1st of March for the following 3 months, and that was for £1,500. The balance on the rent account at the end of March is 4,800. So again, let's try and pull that apart and look at its key features. The year end is March 22. The balance on the rent account is 4,800, and that represents the physical amount of cash that this business has paid for rent. I've still got this figure of £1,500, and I'm told that it's relevant to the 1st of March for the following 3 months. So, like we did before, is this an accrual or is it a prepayment? And once you've established which adjustment it is, how much do you think will be accruing or prepaying? And I'll give you a moment to consider that one.
Okay, so we do have someone commenting. We've got Ianella, who has said, I believe this is a prepayment.
Fabulous.
And Veronica said prepayment for 2 months. Saya said an accrual. Just waiting to see. Charmaine Lee has said prepayment.
Excellent.
We do have a separate question. I'll reserve that for that's the end.
Okay.
Jenny Cornish has said prepayment. Janet Crossley has said prepayment, £1,000. Abby has said prepayment. So, yeah, more or less prepayment across the board. Karina Baxter has said £500 accrual and £1,000 prepayment. And Gabriella has said a prepayment of £1,000.
Perfect. So we clearly know our double entry and our accruals and prepayments. That's really well done. So the accounting adjustment we require is a prepayment. And there was a subtle, I suppose, clue in the question. We were told it was quarterly paid in advance. So it's been paid before it was due. We were told that the last payment was on the 1st of March, and that related to the following 3 months of £1,500. And so that £1,500 related to the months of March, April and May. And remember, my cut-off is £1,000. It's £1,000 because it's just for the months of March that I'm accounting for. Now, it doesn't seem we had a problem with that. A lot of people saying £1,000, the 2 months. But just to illustrate how we could make sure and be comfortable with that, if we map out our reporting period like we did before, our year end starts on the 1st of April 21. It concludes on the 31st of March 22. Our invoice period are the months of March, April and May. And again, if we remind ourselves, our year end is March. So anything that falls after that year end is not relevant to this reporting period and should be removed. And therefore, the invoice of £1,500, dividing it by the 3 months, timesing it by the months of April and May, is indeed £1,000, which is the value of the prepayment that we need to make. So let's turn our attention now and have a look at the double entry, the ledger accounts. The bank figure, we've previously confirmed that this won't change, and I'll have credited the bank and I'll have debited the rent account. And that's £4,800, and that reflects the cash movements of this business. And included in that is that £1,500. And I know that because I was told that on the 1st of March, I paid that invoice. And that balance was given at the 31st of March at the year end. So included in that is the 1,500. We've identified we don't need all of that 1,500 included in it, and 2 months amounting to £1,000 should be removed. And therefore I'm going to credit my rent account and debit my prepayment account. That prepayment will reduce the impact on my statement of profit and loss. And I'll see that because when I transfer through to my statement of profit and loss, I'll transfer a figure of 3,800. And you can see that's significantly different from the original bank figure had I not have intervened with that year-end adjustment. So I've reduced my expenses in this period, which means I will have increased profit. And the rent will have a balance of under the prepayments on my statement of financial position. It will be recognised as a current asset, and it will have a balance carried down at the end of the period, ready for the next year. So turning our attention now to that 1st of April 22, the very next day, the first day of my next financial period, I will have a asset balance of £1,000 on my prepayment account. That can't remain, and we've seen that in our previous question. That will be reversed back. So the question I'd like to pose for you is, at the start of the financial year, once the reversal has taken place, what will be the balance on the rent account? And what do you believe will be the balance on the prepayment account once the reversal has taken place? What will those balances be, guys, once that reversal has taken place? And I'll just pause for a moment to give you time to collect those thoughts.
Okay, so yeah, just getting some stuff through now. Tammy has written DR1000, rent AC, and nothing on prepayment. Saya has written prepayment equals 500. Just gonna wait to see if we get anything else through at all. Abby has written prepayment 0, rent expense 1,000.
Perfect.
And give it a few more seconds to see if anyone else comes through, and then we can go ahead. Got Brogan here who's written DR1000, rent expenses. Jenny Cornish has written DR rent 1000, prepayment CR 1000. And maybe we'll see if we can get one more. Okay, yeah. And Anna has written prepayment, null balance, expense, DR balance 4,800. So we're definitely getting a mix of answers here.
Okay, fabulous. Okay, so as things stand, this is the very first day of my financial year, the next reporting period. The balance brought down on my prepayment account is £1,000, and that represents the prepayment that I made last year. And that prepayment was for the months of April and May. That current asset can't remain on my statement of financial position, and therefore will be reversed back into the statement of profit and loss accounts. And to achieve that, and I think some of the responses actually said the double entry, which was great, we will credit the prepayment account and we will debit the rent account. Meaning that at the start of the year, once the reversal has taken place, the prepayment account is 0, and that will receive the prepayment if there's one required at the end of this financial year. But on my rent expenses account, I will have a debit balance of £1,000, and that represents the months of April and May, because whilst those months were paid last year, we're accounting for them this year. Being completely honest, accruals and prepayments can be a challenging topic. Deciphering questions, understanding what information goes where can be a challenge to learners. But with a little bit of structure, hopefully comes confidence, and with confidence becomes a question that's all almost manageable. Therefore, I'd just like to take the opportunity just to sort of show you the expense and income steps and just try and break those down to give you some sort of methodology when you're approaching these questions going forward. The bank figure doesn't change. It will be given in the question. It will be there ready for you to pick up. And the double entry, as we should be comfortable with, is to credit the bank and debit the relevant expense account. The reason we accrue is because costs are missing at the end of the period, they're outstanding, we haven't yet paid them. And therefore the impact of the accrual is to always increase the expense account. And therefore the accrual, as we saw with our earlier double entry, is always recognised on the same side of the account. We will debit the expense account. The prepayment, well, it has the opposite effect, and we make a prepayment when costs are paid in advance of when they're due. And therefore we will remove those costs by crediting the expense account. So step 2 is your year-end adjustment. Understanding whether it's an accrual or prepayment can be a challenge. Understanding if costs are missing, if they are, we accrue. If they've been paid in advance, we'll prepay. And then deciphering how many months should be accrued or prepaid. And we saw earlier in the presentation that little calendar view which mapped out the reporting period, made a comparison to the invoice period, and hopefully that will give us some sort of structure when dealing with that aspect. Once we've completed that, we will transfer figures off to our financial statements, having an appreciation that the year-end adjustment from last year will impact the expense account next year. Because if last year I accrued an expense, I would have debited the account last year, meaning the reversal will appear on the opposite side of the account. And if last year I made a prepayment, I would have credited the account last year, meaning the opposite entry will be on the debit side of the account. So 3 steps. The bank figure, we're comfortable with that. We've been doing that since level 1, level 2, and again at level 3. The year-end adjustments, that may take a little bit of practice to get comfortable with. It's accruals if costs are missing, it's a prepayment if costs are paid in advance. And then appreciating that those year-end adjustments will appear as the reversal entries at the start of the following year, and they'll appear on the opposite side of the account. So as long as we understand step 2, step 3 will fall into place for us. Of course, we have income accounts, and we talk about income accounts being rent received, for example, and maybe commission received as sundry income accounts. The same 3 steps are involved. The bank figure doesn't change. It sits on the credit side this time because I've debited my bank and I'm crediting my income account. If I'm accruing income because it's missing at the end of the period, then I'm wanting to increase the impact on my statement of profit and loss, and I'll achieve that by crediting my income account. And if I've received income in advance of when it was due, then I need to make that prepayment to reduce that impact, and therefore I will debit my income account. And once I've established the accrual or the prepayment, I'll then perhaps reflect back on my calendar to review, is it a 1 month, a 2 month, a 3 month accrual? I'll finalise my accounts for the end of the year, and having an appreciation that those accruals and prepayments from last year will be shown as the reversed entry at the start of the financial year. Meaning if last year I accrued an income, I would have credited the account. The reversal will be shown on the debit side. And if last year I prepaid an income, I would have debited my income account, meaning the reversal will be shown on the credit side. So the same 3 steps. The bank is straightforward. The year-end adjustment will come with practice, and the reversal is just the opposite of step 2. It's just the opposite side of the ledger account. So let's take a moment and try and pull all that information together and look at one final question. A nail salon rents out rooms to nail technicians. It has a financial year end of September 22. At the start of the financial year, there was a balance of 1,200 from the previous year, and that related to an amount paid in advance at the end of September 21. During the year, receipts from technicians amounted to £8,000. However, at the end of September, an amount of £500 remained outstanding. Now, that appears to be a little bit more involved than our previous questions. We've got a few more figures involved, but we're still going to pull out the same data. Establishing when your year end is key, and that's September 22. Anything after that date, not relevant to this activity. How much have I received from my technicians? What's the bank figure? Well, we're clearly told that that's £8,000 worth of receipts have been received. And therefore, I'm left with two other figures. The balance at the start of the year of £1,200, and we're clearly told that related to a prior year adjustment. And that prior year adjustment was made because something was paid in advance. And then I've got a figure of £500, and I'm told at the end of September that was outstanding. So two questions, if I may. Firstly, how will the amount of £1,200 be recorded in the ledger accounts? Do you believe it to be a debit or credit? And will the amount of £500 be an accrual or prepayment? And again, I'll just give you a moment to consider that and send your comments across when you're able.
All right, let's see. Well, as Helena said, we'll wait a moment for you guys to work this one out, and then see what we can do. Oh, okay. I've got one here from Tammy who has said 1,200 as a debit and the 500 as an accrual. And Brogan has written DR 1,200 in rent expenses. And let's see, Charmaine Lee has written debit of 1,200 and an accrual of 500. Karina Baxter's written 1,200 DR, 500 accrual. Sai has written 1,200, take of 1,200. Veronica has written 1,500 reversal of prepaid income and 500 accrued income. And Brogan has added 500 accrual.
Okay, brilliant. Thank you very much. So let's look at this £1,200 to start with. At the start of the financial year, there was a balance of £1,200 from a previous year, which related to an amount paid in advance at the end of September 21. So last year, £1,200 was in my account. It related to a future period, and therefore there would be a need to prepay that income. And when I prepay an income, last year I would have debited the account. But at the start of the next financial year, at the start of this financial year, that would be represented in my account as a credit entry because it's the reversal of that adjustment. And £1,200 would be on the credit side of the rent received account. We need to consider the bank figure. The bank figure is £8,000, and I've debited my bank and I would credit rent received. And that £500 that was remaining outstanding, and there's our clue word, outstanding at the end of the period. It's an accrual because income is missing. It needs to be accounted for. It hasn't yet been received. And therefore, I will credit my income account and I'll debit my accrued income account. And then the only thing left to do is to transfer these balances through to the statements, recognising sundry income of rent received of 9,700, which we can see is significantly different from the original bank figure of £8,000. And on my statement of financial position, I'll have accrued income, which will be recognised as a current asset, and that will have a balance carried down of £500 at the end of that year. And I hope you found this session useful. I hope you've been able to take something from it. The really only thing for me to ask is, are there any questions?
Okay, guys. So yeah, we're just gonna see if you guys have any questions. If not, we will wrap up. But I'll give you a couple of minutes to ask anything. If you do have any questions, actually, we did have a question from earlier from Patricia, who wrote how to add a supplier invoice to the system after we received it.
Okay, so the way you would deal with that isn't exactly the way you would deal with any invoice. The invoice and timing of the invoice isn't really relevant in terms of the accrual and prepayment, because the accrual is made because costs are missing at the end of the period. So we've made the accrual because we identified costs were missing. When the supplier invoice is received and we pay it, it will just be dealt with in the exact normal way it would be. It will be entered onto the system, and the double entry when the payment goes through would be to credit the bank and debit that supplier's account. The accrual or the prepayment adjustment enables us to account for costs and income in the period they're relevant to. And I hope that helps.
Perfect. So yeah, no, everyone was saying that was great and that it was clear and concise. So we don't appear to have any other questions in relation to the session itself. So no, that's perfect. I would like to thank everyone for joining us and being a part of this Facebook Live. Please do remember that these sessions are recorded. So that does mean that you will be able to re-watch it in the case that, there isn't anything that you understood. You can go ahead and find that in the video section. So it doesn't matter if you've missed it, you can go ahead and re-watch it. Of course, if you were here and you'd like to re-watch it, you still have the option to do so. Please do remember we are hosting another Facebook Live. This is the 17th of October on Qualifications 22 or 2022. Come along and ask any questions you have in relation to the syllabus itself. Please follow us, of course, on Facebook, Instagram, Twitter. We are on TikTok now as well. Follow us across the board. You can usually find us with the hashtag, with the handle YourAAT. Yes, so again, thank you guys very much and see you later. Oh, of course, and thank everyone at Premier Training, especially Helena. That was a brilliant session, one of the best we've had. I'm really happy that you came along and did that. Thank you again. It was an amazing session. Thanks again, everyone. Bye for now.